you caught between the flexibility of a 9-to-5 job or the promise of freedom offered by gig work? If you're unsure about how those different income streams might affect your taxes, stay with me. I've got some vital tips that could save you money during tax season. In today's episode, we'll break down exactly how taxes differ for a traditional 9-to-5 employee versus a freelancer or gig worker. We'll look at everything from deductions and write-offs to filing best practices. Before we wrap up, I'll connect the dots to another vital financial topic, TFSAs versus RRSPs. So keep watching to equip yourself with the knowledge you need to maximize your earnings and minimize your tax stress. Picture two friends, Alexis and Jamie, who both recently moved to the same city. Alexis has a stable 9-to-5 job with a clear salary and steady paycheck. Jamie, on the other hand, decided to pursue a more flexible lifestyle as a gig worker, juggling multiple freelance jobs. Fast forward a few months, tax season arrives, and Alexis is breezing through paperwork with a T4 slip, while Jamie is scrambling to figure out quarterly taxes, potential deductions, and how to pay both employee and employer portions of the CPP. This scenario paints the perfect picture of how differently traditional 9-to-5ers and gig workers experience taxes. Let's explore those differences. Tax withholding versus paying yourself. When you're employed in a 9-to-5, your employer handles a good portion of your tax withholding. You see taxes coming off each paycheck for federal, provincial, and other mandatory contributions. This typically makes it easy to know how much you've already paid to the government. You get your T4 at year end, and your payroll department or HR team takes care of remitting what you owe. It's a mostly hands-off process, and you rarely have to think about setting aside additional funds for tax season, unless you have supplementary income on the side. As a gig worker, you are essentially the employer and employee combined. No automatic deductions come off your payments, which can be both liberating and daunting. You have full control over your money, but this also means you have to self-manage your tax obligations. A good rule of thumb is to set aside between 20 and 30% of each payment for provincial and federal taxes. This habit not only helps you avoid a surprise bill at tax time, but also fosters a mindset of saving and financial discipline. Deductions and write-offs. Traditional employees have fewer opportunities for deducting expenses. In most cases, you might be able to write off union dues, professional fees, or certain work-related expenses like uniform costs or home office expenses if you meet the strict criteria. Generally, your employer pays for most of your work-related necessities, so there aren't many eligible claims to reduce your taxable income. Gig workers, on the other hand, operate much like small business owners. You can often deduct any legitimate expenses that are directly related to earning your income, including home office costs, travel expenses, marketing materials, software subscriptions, and even a portion of your cell phone bill. However, with this freedom comes responsibility. Meticulous record keeping is crucial to substantiate every deduction you take. Maintaining organized receipts and digital logs can save you from stress or penalties if the CRA ever comes knocking for an audit. Planning for CPP and EI. In a traditional job, your employer deducts your portion of CPP and EI and contributes their share as well. This means you pay half and your employer pays the other half, lightening your load significantly. You'll see these deductions on every paycheck, and that's usually the extent of your involvement. As a gig worker, you cover both the employer and employee portions of the CPP, essentially doubling what you might have contributed if you worked a traditional job. EI for self-employed individuals can be voluntary, but it might be worth considering if you qualify, especially if you want the safety of net certain benefits. Budgeting for these contributions is important, so you're not caught off guard by the extra financial responsibility. The fourth thing to consider is filing requirements. If you have a 9-to-5, the filing process is relatively straightforward. Your employer issues you a T4 slip that shows your total income and the amount of tax already withheld. You simply plug those numbers into your tax return, and any additional credits or deductions you qualify for can be applied to help you reduce your tax bill. As a gig worker, the process gets more complicated. If you walk through certain platforms, you might receive T4A slips for some of your income, but there could also be direct payments or cash transactions that don't generate official documentation. Each income source must be tracked meticulously and reported as part of your professional and business income. This means you might need to complete forms like T2125, Statement of Business or Professional Activities, to declare both your income and expenses accurately. The next factor to consider is quarterly tax installments. In a 9-to-5, you usually don't have to think about remitting taxes on a schedule because your employer is doing it for you. Every paycheck already accounts for the tax owed. At year end, you might get a refund or owe a small difference, but you're unlikely to be hit with a large sum. As a gig worker, the government expects you to pay your income taxes throughout the year in quarterly installments if your tax bill surpasses a particular threshold. This is especially relevant if you earned enough in the previous tax year that you owed more than $3,000 in taxes. Failing to pay these installments on time can lead to significant penalties and interest charges. To avoid getting behind, mark your calendar or set up reminders for those quarterly deadlines and ensure you've set aside enough funds to cover the payments. Record keeping tips. For 9-to-5 employees, record keeping is simpler. Keep your pay stubs, T4 slips, and any other professional development receipts or job-related costs if you claim them. At the end of the year, you can quickly gather your documents and file your taxes without hassle. Gig workers should be systematic and proactive about record keeping. This means logging every payment you receive and every expense you incur. Use apps or software to track mileage if you drive for work, and organize receipts in a way that's easy to reference later. Whenever possible, separate your personal and business finances with different bank accounts and credit cards. This separation streamlines your bookkeeping and reduces the chance of mixing personal and professional expenses. Staying organized not only helps you file accurately, but could also save you from the stress of an audit. Now that you've got the basics of how tax responsibilities differ between a traditional 9-to-5 and gig work, it's time to make sure you're making the most of your savings and investments. If you haven't already, check out my video titled TFSA or RRSP, which is better for you. You'll learn how to use the right registered account to grow your money strategically. Thank you so much for watching. See you in the next video.